Good afternoon, everybody. Good afternoon. Thank you so much for joining, guys. I can already see that there's quite a lot of people who have joined already. A lot of early birds. I love that. Good afternoon, Ed. Hey, Jay. Hi, Lisa. Already some familiar names. Fantastic. As always, we'll give it a a couple of minutes for people to join. But really cool session today, guys. We're going to cover how to find the perfect entry and exit. Hey, Stephen. Just whilst we're waiting, guys, let me know how many people are here or have issues with finding a good entry point. How many people here get a good entry and then a lot of the time just end up getting stopped out or the market just completely reverses on them? Hey, Chris. Dave, you make a good point. Stopped out or you get out of the trade too early. Hopefully, I'll be able to help with that today. The common problem amongst traders, right? Where do I enter? Where do I exit? And I'll give you the solution. I want to make it very clear to you guys. I can try and make this as easy and as flowing as possible. I'm not going to sell you a dream. I'm not going to, get your hopes up. I'm going to tell you the reality of it. I can give you the solution, but you need to practice it. Again, you need to practice. You need to put the work in. If you really want to really take your trading to the next level, you have to put this in action. And you have to really go for it. All right. Cool. We got loads of people in, which is awesome. Thank you so much for joining, guys. So, okay, fantastic. Let's get started. Right. Let's get down to the juicy stuff. So, let me share my screen with you. I always just get a nice little. Well, in this case, it's a blackboard. Right. And I want to make it as visual for you guys as possible. So it's how to find the perfect entry and exit. Okay. What if I told you that there's no such thing? Right? What if I told you that? You'll probably just get up and leave. Right. Right. The majority of people that come to me or London Trading Institute or even to other online gurus, whatever, right? The majority of people want, when they first start out trading, they want to find out, where do I enter and where do I exit? And I suppose the expectation is I want a 100% win rate. Okay? I never want to lose. I want to make as much money as quickly as possible. Right? I want to make as much money as quickly as possible. I can guarantee you guys this unrealistic. Realistically, even a 50% win rate is considered good. Making as much money as quickly as possible leads you to gambling. Okay. That's the last place you want to be. Who, and be honest with me, guys, who in this chat right now, who on this webinar is coming from the position of, I need to win as many trades as possible and make as much money as quickly as I can? Who's currently in that trading area? Because if you are, you're going to find so much value in today. It's unreal. Because I'm going to try and kind of rewire the way that you're thinking and show you what you can do and realistically what you can achieve with it as well. All right. Dave, no problem at all. So talk to me, guys. Who sees like loads of this stuff online of like 80, 90% win rate? You should be winning 80 to 90% of your trades. Who's seen stuff like that? I certainly have. I see it every day. I'm a trader. Whenever I go on TikTok, like it's like the algorithm just knows, and it sends me loads and loads of trading stuff, loads of gobbledygook, and loads of people being like, this is the perfect strategy, this is the perfect entry, the perfect exit every single time, right? We're all programmed to win we want to win as many trades as possible. We just want to win. We hate losing. There's even a theory that we feel a loss and we feel a negative twice as much as when we feel a positive. We feel it twice as much, right? And the question is like, well, why is that? Just let me connect my headset up. I'm wearing my headset and I'm actually not getting anything through it. Here we go. Well, why is that? Like we've all heard of bad news travels fast, right? Because negativity has more weight, more of an impact, right? We feel a loss more than when we feel a win. But the thing is in trading is that you're going to lose. You can't let that bog you down. You need to be able to jump back up and just go again. And go again tomorrow. Tomorrow is a new day, right? But in terms of finding the perfect entry and the perfect exit, it comes down to one specific thing. And if you can master it, you will be so successful in trading. You guys answer it first. I know you're here to get the answer, but what do you guys think? What do you think is like the key to the perfect entry, the perfect exit? Is it a good strategy? Is it a good indicator? Is it being disciplined? What do you guys think? Let me know. I can get a really good idea as to where you guys are at. And if anybody gives me the right answer, I will take you out to dinner. So Lisa, you say disciplined. Being consistent, yeah. What else, guys? All of the above, yeah. Price action, experience and discipline, understanding price action. Oh, here we go. So understanding price action, market structure, discipline and money management. Easy to say, hard to implement. Remain impartial, keep emotion out of it. Risk management, right? So you can see, just with the interaction in this group today, some of the same answers, but a lot of different aspects of it, right? I like to keep trading very, very simple for my brain, right? Sometimes people see the stuff that I use, they might get a little bit overwhelmed or they might find it complicating, right? But what matters is that it makes sense in your brain and it kind of gives you that aha moment, right? Now, when it comes to finding the perfect entry and perfect exit, first of all, nothing is perfect. Your trades will be different every time in terms of the different scenario, in terms of maybe even the market. There's no such thing as perfect entry and perfect exit, but you can get quite close and you can create scenarios or find scenarios for yourself in the market where you can get very, very good entries and very, very good exits. But there's no such thing as perfect. Now, it all comes down to one thing, which no one mentioned. And that is what we call market context. Okay? Market context. Market context is the tool and the bit of technical analysis you need to understand in order to determine what is going to be your entry and what is going to be your exit. Okay. So you're probably going to ask me, Dan, what do you mean by market context? That makes no sense. Sometimes people think of this as like what you call a bias or a narrative, right? Some people think of this as just trading the higher time frames. Okay. But the reality is that market context is essentially the market conditions you are trading in. So you want to look at stuff like, so you want to look at stuff like this. So we're going to go market context. If I can actually decide to type today, market context. Market context is how is the market moving? How is it performing right now? How far have we moved? Over what time? Right? Understanding your key levels. Understanding the psychology. Understanding the different traits that currency pairs have. Right? I've had loads of different sessions with you guys and the community on how you can build a plan, you can build a strategy, you can be disciplined and you can be consistent, how you can become a professional trader, how you can, build this fantastic lifestyle for yourself, right? But the thing is that you can have the best setup in the world that can literally give it to you on a plate as to the perfect entry and the perfect exit. But if you do not understand market context, you will remain break even for the rest of your trading career. And why is that, right? Because market context allows you to understand all of this. It's like, think about taking your car to a mechanic, right? If the mechanic just had a strategy, right? And it's basically saying like, he has a toolbox with just a spanner in it. You take your car to the mechanic, he'll open up the bonnet and he'll just start twisting the same things every single time. Sometimes he might fix the car. A lot of the time, he won't fix the car because he needs other tools or he needs different experience, or sometimes it relies on the brand of the car, right? Sometimes it relies on the type of engine the car has. All of these things. But imagine if you take your car to the garage and that garage has a knowledge about all the different types of cars that there are. They've got all the different tools for all the different types of problems that car has. That is essentially market context, right? It's like I know if I take my family car, my Hyundai, right? If I take it to a garage, I know that those people in the garage will go, these are the common problems with the Hyundai. This is how the Hyundai moves. This is how it feels, right? This is the type of quality it has. This is how I can usually solve these problems. I need X, Y, Z, right? I don't take my Hyundai to the garage and they treat it as if it's, I don't know, like a Nissan, or they treat it as if it's a Peugeot, because they're not. They're different, right? So market context, what it allows you to do is it allows you to identify, okay, realistically, what market am I trading? And if I can understand the type of market I'm trading, I can then adapt my style and my strategy around that specific market, right? Does that make sense? Before I continue, does that make sense? It's about being able to identify the type of market you're involved in and then being able to adapt to it, right? And I'll show you how you can do that. All right. Does that make sense, guys? Just say yes or no in the chat. If it's a no, that's okay. I can cover it again for you. I can go like this all day. All right. Awesome. Starting to get lots more yeses. Okay, so I haven't confused people. That's good. We're along the right lines. So I know it's a lot easier said than done. I could just say, hey, look, learn market context and you will become a full-time trader. I wish it were like that, but it doesn't, right? So I'm going to show you. So let's go into some markets and we'll see what we can find. All right. So a really good example would be NZD USD, right? So look at how we have been trading. Let me just take all of these off. We'll have a nice blank chart for you guys, right? Tell me in the chat, guys. Tell me in the chat, how has this market been moving recently? We might be seeing a shift in that today, but how has this market been moving recently? So we're looking at the daily time frame. Has it been going up aggressively? Has it been going down aggressively? Just in a recent time period, how have we been moving? Is it a clear uptrend? Is it a clear downtrend? Is it bullish? Is it bearish? Is it choppy? Is it, is it what, right? So we've got some people saying bullish. It's steadily going up, right? You're right. It is steadily going up. But I actually want you to focus. Let me rephrase. As a trader, you can analyze whatever time frame you like, right? Our job is to find the opportunity in the here and the now. How can we execute it on the here and the now? Is there a setup right here, right now, right? When you're looking at your higher time frames, these candles are like a week, a month, a week, a day. Like you think, well, this is going to take forever, right? But we're interested in the here and the now. We're looking at the higher time frames to gauge what sort of market we're trading in. How is it moving? So yeah, it has been going up. It has. But what about recent price? I'm talking the last 10 candles, right? How's that been moving? And I'll give you guys a tip. Never account for the current day. This hasn't closed yet. This could close up here. We never know, right? But never account for the current day. Okay, so look at that. Look how, like in the chat now, everybody's now changed their decision from this market's going up to this market is ranging. Some people even saying down. Down is what we're seeing today, but that's not confirmed yet. So take out today. We don't care about what's happening today. We care about what's happened in the past. And we've clearly been moving sideways, right? We've been bouncing off of support and resistance. This is market context, guys. This is the type of market we're involved in the here, in the now. This type of market can break out. Absolutely. It can go crazy. It can do loop-de-loops if it wants to, right? I don't care. I care about what it's doing right now. This market is clearly bouncing between two key levels. And where are we at right now? Well, we're at a key level, potentially for a buy. You can then go down into your lower time frames and you can then do the work and find the setup and hone in on your strategy. For those that have joined me over the last couple of months, like we've covered this in detail. I'm always happy to cover it again in future webinars as well, right? But this is market context, guys. It's understanding the type of market you're involved in. So think of it like this. What about if you were trading this market? We're on the replay now. We know what happens. But what about if you had 1, 2, 3 big bullish days in a row? It's like, well, what do you do then? Are we moving sideways? Are we starting to move up? Well, you can zoom out as much as you like and you can go, well, wow, okay. This market can project to go all the way up to here if it wants to, you know. I predict that it will go all the way up to these previous highs, but that could take months. Focus on price action in the here and the now. How are we moving? Well, price came down aggressively, but it's come up just as aggressive. I mean, I'd look at that price action. I'd be like, well, probably want to think about buying that, right? So we can take a look at a couple of other markets. We can always flick through. So you can look at, let's take a look at gold, right? Let me take that off. Take a look at gold. So, well, what type of market are we involved in at the minute? Again, recent price action. We're talking about the last 5-10 candles. What's happening, right? Well, on gold, not only are we bouncing off of a key level here, not only that, but we've actually steadily gone up. And this is what we usually call smart money. It's not moving up aggressively, right? It's slowly making higher lows, but essentially it's kind of choppy, kind of moving sideways. And then on top of that, we've hit a really nice key level of previous highs, which says, well, okay, we could be more likely to be going down now. You see? So let me tell you this. When you identify the type of market you're wanting to trade, that's when you go down into your lower time frames, you find the setup. Once you find the setup, you can then apply what you know about the market and the type of market we're trading in, and you can then define what your entry and what your exit is going to be, because it will be different depending on the market conditions. I'll give you an example, okay? let's take NZD USD again, right? This market has been moving sideways for the last couple of weeks. It hasn't really been doing anything, right? But look at this. The market's choppy. It's not doing anything, but we're at a key level to potentially buy it. Now, I've just mentioned this market's choppy. It's not doing anything. A lot of people would take this trade and they would buy it. It would be a good buy. But what they fail on is that they then decide to hold this trade, right? Until it hits the moon. And they think, wow, okay, well, this market's, it's hitting support. It meets all of my criteria. I'm going to enter here and I'm going to exit when we get to all these previous highs up here, and I'll make loads of money. I'll put my stop down here. I'll put my target up here. I'll make 10 grand and I'll feel amazing about it. That's how beginner traders think. But the thing is that you don't know that it will get up to there. You don't know that. You can't control that either. You want to deal with the facts and you want to go, well, actually, this market's been moving sideways. We're in a nice sort of buy area, but it's not really going anywhere. So if I want to take a trade on NZD USD, well, I kind of want to get in and out as quickly as possible. Like maximum, I want to be getting out here rather than all the way up here. Do you see the difference? The difference in thinking. Just because we've looked at the market and we say, right, okay, what are we actually doing now? Are we choppy? Are we moving sideways? Are we aggressively going up? Are we aggressively going down? Because we're choppy, it instantly instills something in my mind to say, well, if we're in a choppy market, this will probably continue. And we really just kind of want to trade that move compared to this move, right? I'll tell you why this is the wrong way of thinking. Because people could buy it here, and yes, it could go up. It could go up. They're feeling so good about it. And they could be making so much money, way more money than what I would have made on the trade. And then all of a sudden it goes boom. And then it stops them out. And they think, oh, why didn't I exit there? Oh, why didn't I exit here? Oh, why didn't I exit here or here or here? Why did I not move my stop to break even? And all of these questions start to come up, which I'm sure everybody, including me in this webinar today, has experienced that. And it's frustrating. But the thing is, the thing that was not considered when you were this guy, the thing that wasn't considered was the type of market you were trading. How are we moving? How far has it gone? Over what period of time? What do the candlesticks look like? Are we bouncing off of any key levels? Does that make sense, guys? Hopefully it does. If it doesn't, let me know. But hopefully that does make sense. Okay. Makes sense? 100%? Yes, 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 yes. Perfect, perfect, perfect. Nice. Great. Now you can leave me a nice Trustpilot review because I'm so good at teaching you guys. I'm only joking. Right. Okay. So I'm going to ask you guys a question. What is the most important thing to find the perfect entry and the perfect exit? Tell me. Is it discipline? Is it confidence? Is it your strategy? What is it? Let's see who's listening. Who hasn't fallen asleep? Great. Amazing. People are listening. That's good. Market context, market context, market context. Okay. So a lot of people will be looking at trading NZD USD right now, me included, right? I want to trade NZD USD. The likelihood is that I will probably take the buy. But I'm the type of trader where I take into consideration market context, and the likelihood is that I'll be getting out anywhere sort of within this area. Because that is what is factual, right? So look at this. These are the key things that you need to consider when you're looking at market context. And I put market context down essentially into using 2 or 3 tools, okay? And they are really, really simple. The first one is candlestick analysis. All right. So this is essentially, what is the market doing? It's price action based. It's what is the market doing? This helps you identify direction. Okay. It helps you identify trends. It helps you identify what you call the chop, right? If you understand how to read a candlestick, you can look at a market and you can go, okay, we're moving sideways, we're going up, we're going down, we're in a really choppy market, right? So candlestick analysis is number 1. Number 2, support and resistance, i.e. key levels. Big banks, big institutions work off of the higher time frames. They look at what we call macroeconomics, right? They look at interest rates, unemployment, balance sheet, economic growth, inflation, all of these things, right? By balance sheet, I mean balance of payments, right? But they look at all of these things and they think, right, okay, the market is likely to go up here based on the current economy, or the market is likely to go down here based on the current economy, right? And they trade off of key levels. I can show you prime examples. Look at USD CHF. We'll go down into the weekly time frame. When you look at a weekly time frame, or even let's go as far as the monthly, right? When you zoom out, the majority of the time, you are literally just moving sideways. The majority of the time, bouncing between key level after key level after key level, right? Euro GBP, again, you're just bouncing between key levels. That's all it is. Sometimes the market moves aggressively, like Euro Yen has done over months and months, right? But again, we're now in a position where we're ranging, right? We're just bouncing off of these key levels. They always work off of the higher time frames, right? If you can understand how to read the higher time frame and read what sort of context the market is trading in, you can then go deep into it and find a really good, not perfect, but a really good entry and also a really good exit. All right. Perfect. All making sense, guys. Enjoying it? Yeah? All good? I hope so. So we're gonna actually look at a trade setup on NZD USD as well. So I'll show you guys, because we've done the market context on it, I'll show you guys kind of my process, right? I am currently in a gold trade too, actually, which is just moving sideways right now, but we'll see how it pans out. So let me just clean this up for you. And we can go to the weekly time frame and we can take a look at NZD USD. All right. So remember, when we look at market context, we basically look at two things, right? I always start off on the weekly time frame. We start off looking at two things. What are those two things, guys? Just let me know. Let's get our brains working. Let's get going quickly because I want to show you guys lots of things, right? We use two little tools just to see, okay, where are we moving? What sort of market are we involved in? So we're looking at the weekly time frame. We use what? Nitesh, yep, support and resistance. That is one. Great job. Dave, levels, yep, support and resistance. Great. What else, guys? Lisa, no, I did not cover that. Two things. Support and resistance and not trend lines. Simon, candlesticks. Candlestick analysis, right? Support and resistance, candlesticks. That's all you really need. All of the different price action, the fibs, trend lines, all of that stuff can be done later on. We just want to get a feel for the market. Remember, like we want to trade this pair, right? But firstly, we actually want to see what type of market it is first. And we do that by just looking at the candles, looking at support and resistance. So let's focus on the candlesticks first. On the weekly time frame, how have we been moving? Have we been aggressively moving up? Have we been aggressively moving down? Well, the answer is we've been moving sideways. We're not really doing anything. But what we are doing is we're bouncing off of this key level here. Last week, big push up, rejected off of it. This week, big push up, rejecting off of it. So in terms of the market context, we could be going down, right? But the thing is that we're in a bit of a choppy market. That's just based on candlesticks. Now we can put in our support and resistance. So we have an automated support and resistance tool here, where it gives you those key levels. And we can clearly see 0.6012 is a key level on NZD USD that is being respected. It's being respected, okay? Well, it kind of throws a bit of a spanner in the works, right? Because we were just saying about an NZD USD buy, and now this is saying sell, right? Market context. Because the thing is that yet again, if I shift over to trading view here, yet again, right? We look on the weekly time frame and we put in our key levels, right? Moving sideways. People will look at this and they'll go to the daily and they'll see the setup and they'll go, okay, buy. Right, we're at a buy. They've identified the consolidation, they've identified support and resistance, and they buy it and they think, we're going to go to the moon. Yay. But the thing is, what they haven't done is they've not looked on the higher time frames and gone, well, actually, mate, looks like we're bouncing off of a really, really key level. Could be going down here. So they're trading in an unrealistic way compared to how the market is moving. It's not to say that we can't buy this, by the way. We can still buy it. But we understand in the long run, there's a likelihood we could come down. It might not, but there's a likelihood that it could come down, right? Then we can go into the daily and we can go, right, okay, we've got 0.616012 that is always respected on the weekly. And also on the weekly, it respects 0.5883 as support. So, okay, we can think about potentially buying this. But I'm going against what I'm seeing on the overall time frame. So I want to get in at a good price and I want to get out today, because this could go up, and then as soon as Monday or Tuesday hits, this could then go and stop me out. So understanding market context is another element of being able to manage your risk, right? It's all about becoming a good risk manager. So go back to the daily. You can even put in your daily levels and you can go, right, okay, well, what daily levels are we bouncing off of? And it picks out all the daily levels for you. And you can even see here, we have all these key levels that the market is bouncing off of right now. However, we are bouncing off of 0.6. Nice round number, nice institutional number. If you've got a notepad and pen, I highly recommend you note down round numbers. They're psychological levels. 0.5, 0.6, 0.7, 0.8. Like, they are usually very, very key levels. Usually, like, I could go onto a chart now very, very quickly, and I could go, right, 0.6, 0.6, 0.7, all round numbers, right? 0.7 and 0.8, for example. For this market in particular. Or 0.5, sorry. Right. You can actually see those round numbers act really nicely as both support and resistance. We've done no analysis. We just put it in at a round number because they're psychological levels, right? But anyway, we've got an area where we are likely to see some sort of reaction and potential buy on NZD USD. So when we go down into the 4 hour, we can see it a little bit more clearly. If I zoom in, right, we have this really nice area of support that we're coming into, right? And looking at this, it's like, well, it looks like we could buy it up to there. We have the expectation that that is a good target now, not all the way up here. That's unrealistic. But here is a good little target that we can aim for. We can then go down into the 1 hour and we can go, right, okay, where's our entry going to be? For a lot of the one-to-one students who work with me, we've looked at a bit of this morning in terms of a setup. But if we see this market close back above this level, you can look at potentially getting in on a pullback and having that as your target. You could be in and out of that today. Seriously, you could be in and out of that today. You can even go down into the 15-minute and you can clearly see this market is now starting to move up. It can move up slightly. You can wait to get in on a pullback and then take it. All because we understand market context. You know? So your entry is, again, dependent on like the key levels, etc. But what's most important is actually the exit. Because the majority of people trade the strategy, they trade with a set target profit or whatever, right? Or a set risk to reward. Sometimes it works out, sometimes it doesn't. But the type of market that you're trading ultimately defines what your target is going to be and where you're going to get out. So when you understand market context, you can then say, okay, this is the type of market, therefore, this is the most realistic and the most highly probable exit point where I'm near certain or it's highly probable that I'll be able to bank some money there. Okay. That makes sense, yeah? I know I ask it all the time, but I always want to check in with you guys that it's all understandable, right? Just because we understand the type of market we're trading, we can adapt and say to ourselves, our target is going to be lower down rather than higher up. If you're trading a really strong trend and you get a pullback, that's where you can go for the bigger targets and you can exit later. All right. I'm also looking at the US 30 today. Let's see what the US 30 is doing. Let's take a look at the US 30. Let's do some very quick analysis on that bad boy. Okay. And I haven't actually done any analysis on US 30 today, so this is all completely new. So let's go and do trade detector. So all of this is a trade detector software. I use this just to help me out with my technical analysis. It helps me find really, really good entry points. And we can go to the weekly and we can find US 30, so the Dow Jones. And we can get a pretty good idea as to where we are. So you can see that the Dow Jones, when it provides these blue and red arrows, that we usually get quite a good signal for a sell opportunity. And that's kind of what we're getting at the moment. So what type of market are we trading in? Look at the candlesticks. Well, for the past 1, 2, 3, 4, this is the 5th week, we haven't really moved anywhere. So I'm not going to take a trade and target down here. I'm not going to take a trade and target all the way up here because we're not moving right now. I'll put my key levels on. So let's put this on because I have to add. Right, so these are the key levels. It hasn't picked out any key levels on that time frame yet. Let's go to our daily time frame. Again, you can actually see that this market has not really moved anywhere. The candles are small, the candles are wicky, they're not really moving anywhere. You can still trade it, but you trade it with the expectation that you're going to be just targeting small amounts. Again, you want to be in and out really within the day, because that's what the market is doing right now. If we start to see this market absolutely melt and really, really move down over the next couple of days, that's when you can go, okay, I'm going to get in on a pullback and I can hold for a bit of a better target, right? But we're not experiencing that. That hasn't happened yet, and we can't predict for that to happen. We trade the here and the now. We trade in the moment. We find the opportunity as it is. Okay? So, we're trading a choppy market. We can put our daily levels in. We go, right, okay, where are we on the day? Okay, so we're bouncing off of this resistance here. We're bouncing off of these previous highs. So I'm more inclined to take a short on the Dow Jones rather than buy it. But if I were to take a short, my target would be down here. Because that's another key level. And that's where I'll get in. That's where I'll get out. Sorry. That's where I feel comfortable in getting out. We'll go to our 4-hour time frame, right? And this is where we start to see, and we're honing in, and we start to see what we call breaks of structure. So this is where we're taking out previous lows. We're starting to see really big selling candles come in, right? So it's at this rate where I'm more inclined to actually think about taking a potential short on the Dow Jones. Okay. And we can go, right, okay, based on different techniques, different strategies. I mean, for this sort of strategy, you can use Trade Detector. We've got Trade Detector 2 here, which is giving us a sell signal. This is a really nice area of resistance. It could spike a little bit higher to here. But essentially, looking for an entry on the Dow Jones, anywhere within that area makes a lot of sense, right? That's our entry. That's all dependent on a strategy that you guys want to implement, etc., etc., etc. You can use loads and loads of different tools. But what matters most is our exit. Where will we exit? You know, loads of people would take this short trade and they'll think and they'll get excited and they'll trade it and they'll want to take it all the way down to here because they get greedy, because they get excited and they haven't done the necessary work. Whereas the professional traders are the people that get in, they understand the market, and the reality is that they're usually out either here or down here. You guys see the difference? It comes down to understanding market context, controlling your emotions, and trading with the facts. So I'm very confident on the Dow Jones. I will be taking a short opportunity come when New York opens to take this trade down. All right. That's how I'm viewing it right now. And I base it all off of market context. That's how you can find great entries and great exits, just by understanding the type of market that you're trading in. Okay, guys. Happy to answer any kind of questions in the meantime. If you guys don't want to put a question in here, I do actually have a WhatsApp link that I can send over to you. I've got a WhatsApp link here. So feel free to drop me any questions if you need any support, if you need any guidance. feel free to drop me a message directly, and I am always more than happy to help. However, if you guys have any questions now for the last 5 minutes, I'm happy to answer them for you. Hopefully you found it enjoyable as well. Hopefully you found it valuable. We haven't had very many people drop off either. So the majority of people who joined on from the start are here till the very, very end. So I love the commitment. Amazing. Thank you, Ed. No, I appreciate that. Amazing. Thank you so much, guys. If that's the case, you're very welcome, Christoph. Very welcome. You're a noob. It's all fascinating. Love that. Love that, Jason. Love that. You're welcome, guys. Thank you so much for your kind words. And I'm glad that you found it valuable. Any questions, send me a message. I'm always happy to help, point you in the right direction. Cool. Always happy to help, always happy to point you in the right direction, and so on and so forth. I'll be holding a webinar again next week or the week after. I do them at the minute. I'm doing them every Thursday, but or even today it's Friday. Sometimes schedules change, but even if you guys have any recommendations on what you want me to cover as a professional trader, I can take you through that. It's absolutely not a problem. We can do some sessions on them. You can comment. You can go onto our Facebook. You can comment on YouTube. Just let us know what you want to cover, and we're more than happy to help. But thank you so much for coming, guys. Really, really enjoy doing these sessions with you. Have a fantastic weekend, and hopefully, fingers crossed, I will see you next week. Take care, guys. Have a good one.